Hello traders, Gary Wagner here just after 11:30 in Honolulu, 5:30 in New York. It is Thursday, last day of the month, August 31st, 2017, and this is the Daily Show for Gold and Silver. Nice upside move in the precious metals markets as gold continues to track above 1300, but we had some extreme volatility today. We'll talk about that in a second, but gold did finish up on a high note, up $12.40, closing at $1326.50. Of key importance was the low on the day, 1302, quite a range on the day. Our stops are below 1300 on our long position, so we are effectively still long with stops in place. Silver up about 14 cents on the day, 1764, and that all moderately affected by a weaker U.S. dollar, down about 20 points, 19 points at 92.62, and some upside action, moderate and quiet in U.S. equities. Dow Jones Industrial Average, 21,948. NASDAQ, 64.28, up 60 points, and 24.71 in the Standard & Poor's 500. So traders, after getting through volatile intraday market activity, it seems as though gold prices are going to finish strongly higher on the day, on the week, on the month, and yes, the year, as we close at a new yearly high this week after gold prices traded as high as about $1332. Gold currently is at $1327.70, a net change of about $13.50. But even more impressive than that is the fact that when we look at the intraday range in gold today, what we will find is that it had some pretty wild price swings. And in terms of those price swings, we're literally looking at a $26 day in which the market traded to a high just above our current pricing, $1327, and a low of $1302. Of course, we are currently in a trade that we entered on Sunday, and we went long roughly at $12.99. The market continued to move up, and just the other day, we did move our stop to just below 1300. So we were safe on this move this morning as the market went to 1302. And with the recovery now at hand, I feel much more secure about our current position as it resides near the highs of the day at 1327. And traders, most importantly, it absolutely seems relevant that after 2 days of some real consolidation in the market, as exhibited by these small-bodied candles here, we have now returned to the prominent direction of the trend, and that is an upside rally. Not only is this upside rally continuing from this most recent breakout above 1300, but a true case can be made that we are witnessing a second leg of this rally, the first leg taking us from about 1200 up to approximately 1280, then trading sideways or consolidating for a while before spiking once again, breaking above 1300 and moving to higher ground. On today's report, there's a couple of things that I want to talk about in detail. The first thing I want to talk about is scaling, in other words, adding to our long position if we have correctly recognized a rally that has a decent probability it will be an extended trend rally, meaning not trading just within a narrow scope or trading range, which is the scenario that I believe we are currently in. Now, for traders that initially bought back down at 1282, 83, and there were about 30% of our subscribers that kept their stops a little bit looser and therefore did not get stopped out when the market came back down on this last trade. One of the things that you want to consider is as we break above these significant targets like 1300, that's a very logical place to scale or add to that position. In the same token, as this market moves up, for those that just entered the market at $12.99, along with those that are still long from $12.83, there are significant points in which we want to add. We have just crossed over one of those points, which is $13.21, $13.22. And traders, if you recall, that was my original target for where I thought this spike should go to. And now I'm looking more on a longer term basis that I see some clear potential in there. And I've marked them by creating this Fibonacci extension, which basically starts at 1200, takes us up to 1280, takes this correction into account, and we start scaling this extension from 1257. A 1-to-1, meaning if this rally is simply the same size as this last rally, which to me is a minimum of what it would be, considering it's probably something like a 1, 2, 3 in terms of an Elliott wave count, and on this third wave, that cannot be the shortest of any of the waves. My minimum calculation right now puts us at about 1334, but I really believe that we don't have any major resistance in the market till 1377, with some minor resistance at 1352. Now, given these different areas, these are the areas that we will look at for an opportunity to scale or add to our current long position. I will look carefully and closely to see if this particular price point holds and we have more upside momentum. We would probably want to add here and then take these stops that are sitting at 1300 and trail those behind this new level, because this would have to become support if the market is going to continue higher. Traders, for the time being, my recommendation is to maintain your current long positions and to maintain your stop under 1300. We will look to move them up. We will also seriously look to add or scale another position onto our current trade. And lastly, traders, the next chart I want to look at in the study that I want us to consider is really taking a much more long-term perspective, so we can kind of look at the big picture and what we can anticipate throughout the end of 2017. Now, it's quite obvious that from the time that gold prices reached this all-time record high above 1900 per ounce, we have been in a defined, long, and bitter correction. On a technical basis, the way to define that is we have a series of lower lows and lower highs. So we have our first high, we then get our first low, we then get a lower high, we then get a lower low, a lower high, a lower low, a lower high, a lower low, and so on. That all changed at the beginning of 2016. We talked about this infinitum all throughout last year and this year, in that we noticed a key difference in what we had witnessed, and that was this. For the first time since this long, protracted correction, we had the marketplace trade to a higher high than the previous high. That, traders, is extremely significant. We then followed that in suit with a higher low. Now, from that higher low, we then started to have these series of tops at 1300, and as of yet, we have not had the higher high that would be the technical confirmation that we were in a true bull market, a bull market that began at the beginning of 2016. It seemed very improbable that that might happen after we had our first and second failure at 1300 this year, because we've got to take this top out. However, third time was a charm, and we've now effectively broken through that. That's why on an interim term basis, I am looking for gold prices to take out 1378. On a long-term basis, I am simply looking at a pendulum swinging, and what I mean by that is the best way to look at a market that trades from 1900 down to 1000 is to look at that 50% mark, because that is logically over time where prices will ascend to before coming through with some pretty critical headwinds that would be created on a technical basis from this level. It is for that reason that I believe that interim term, we should see the market breach these highs reached last year, and longer term, we could see the market move as high as $1,500. Traders, the basic focus today was on two different distinct subjects, but that both tie in together. One is talking about scaling or adding to our current position if in fact we have caught a trend that's going to be a longer term trend and carry gold prices significantly higher. Which brings me to the second point that we discussed today, which was a very, very long-term view of the market, looking back to when gold was trading at about 1900, down to 1040, and how at 1040 we saw a significant shift in momentum and, more importantly, market sentiment. We are truly no longer in a bear correction as we were in that multi-year correction. We are, in fact, in a bull market. The question is, how strong of a bull run are we going to witness? And to that end, it's simply a matter of positioning ourselves properly so if we get extended rallies, we can extend our profits. This has been Gary Wagner wishing you as always good trading, and we will talk to you tomorrow for the weekly wrap-up and review. Have a great day. Bye-bye.